Hello, everyone. Welcome back to the Prospero.Ai stock market live stream. We have tons of fun topics to cover today. It is absolutely a huge week in the markets with so many companies set to report earnings. We're coming off a Bitcoin conference that had a ton of headlines. We had the Fed meeting this week. So much to cover today. As always, if you're a longtime viewer, please like the stream. It helps us spread the stream across the algorithms of Twitter and YouTube. Thank you for joining in today. I'm seeing the numbers rise. People are tuning in. Thanks for joining us. As always, I'll take you through some of the topics we're going to be discussing today before we jump into them. And we'll be ending the stream with the model portfolio update. So if you're a newsletter reader or a stream viewer, you probably saw George making moves last week, adding coin and CLSK stock based off the Trump speech at the Bitcoin conference and the theory that that was going to be good for Bitcoin and those Bitcoin-related stocks. So I'll have him discuss that, some of the headlines that came out of it. Trump and RFK gave speeches at it. They both said they'll begin a strategic reserve of Bitcoin for the US government, which is a big change in how the government has viewed Bitcoin over the past decade or so. So a lot to cover there. Then we got a earnings report from McDonald's today, which provided a double miss. Although, let's get a live look at the stock. It didn't seem like it was affecting the stock too much. The stock is actually up over 3%. So sometimes you can't predict earnings, huh? But we'll talk about what they revealed maybe in the economic outlook from that report and how consumers' wallets are feeling in the current economy. Then we have probably, I think, the busiest week of earnings this week to cover: Microsoft, Meta, Apple, Amazon. Hello, George. All are going to be reporting this week. So there's potential for massive changes in the market, and we'll see how all those go. And there's also tons of other companies reporting as well. So after this week happens, we'll have a much clearer picture on the state of the economy and the stock market. Later today at 6 p.m., one of the CEOs of the companies I just mentioned, Mark Zuckerberg, is going to be doing a fireside chat with Jensen Huang related to AI. So that'll be interesting for any Meta shareholders or any NVIDIA shareholders to listen to. And obviously, those two are two of the leading tech innovators in the world. So possible headlines to come out of there. We'll discuss how it could possibly affect both of those companies. And then Apple, we have two stories to cover today. One, maybe a more bearish story where they're going to delay their AI update until October. We saw when Tesla delayed one of their updates recently, it hit the stock hard. Doesn't seem to be affecting Apple as much, but we'll cover that story in depth. And then also, Apple made a really cool new patent that just was released. I'll tell you exactly what it covers. It's not related to their phones, so interesting point to note there. But we'll dive deep in on that new patent and the tech that they're working on. And then to end it off, before we go into the model portfolio update, we'll give a little macro picture. The Fed will be meeting this week. It's expected now by the market that they'll cut rates 3 times this year, but we've seen the market price in more rate cuts than have happened already. So we'll hear Jerome Powell from his mouth if that's going to happen maybe, or if he's going to damper the market's expectations, which can move the market either way. Now, before we get into the topics, at the beginning of the stream, let's just take a look at the QQQ and SPY net option sentiment to see if we're seeing any recovery. QQQ is at 3 after hitting 0 last week, so not much gain there. And SPY is up at 42, so SPY is 10 times the QQQ right now. But without further ado, George, let's get your state of the market address and everything we're seeing in the markets this week.
Yeah, it's interesting. For a long time, for people that have followed Prospero, SPY was kind of at 0 as a sign of, market danger, bearishness. But I think with all of, I think the tech run that we've seen, everything, I think we've seen this kind of behavior before. But I do think, and who knows if this is going forward, I do think more and more, funds are starting to hedge the market using QQQ instead of SPY. Um, and that just makes sense given, where people think the risk in the market is, AI tech, and especially like, playing these earnings. It's very tough because, you know, these earnings could very well go well. And we're talking about, I would especially think, Meta's earnings have been very good recently, especially. So it's kind of hard to, bet against them or bet, the poor market reaction we've seen to earnings. Um, so you might keep on your positions, but you might want added insurance in the QQQ, and especially, even what we've seen in, I think this is one of the stories, but we can get into it more, and kind of the way Bitcoin's reacted today. Even though it was, kind of going over the weekend leading into market open, it's really crashed going into it. So I think you see a lot of, at open. So I think you see a lot of sensitivity in the market, a lot of concern in the market, and a lot of concern, I think, especially as it relates to tech, and if tech is overvalued. Um, so we're absolutely seeing that. But we also see strength in the SPY, which makes this a very hard market to forecast. We've kind of said that for a few weeks. There's a lot of volatility, a lot of strangeness. The market was gave us another fake out. It looked like it was going to be a very good day pre-market, and now it's starting to go pretty far down. So when there's that divergence between QQQ and SPY and an option sentiment, bullish, bearish, whatever, we tend to look at that as a very risky environment. We always say we like to see those agree, both in, I would say in the bull bear levels, as well as like the direction. So seeing SPY go up and QQQ kind of be on this downslope, makes it, I'd say, even riskier. And we did see QQQ get up, net option sentiment get up to about 11 this morning. I saw that's as high as it went. But yeah, just a very hard market to read right now. It's why we're kind of playing a lot of longs and a lot of shorts just to make sure we have different bases covered. But yeah, could have taken more profit from some of our trades this morning. But that's one of those things where it's very hard to see what's going on in this market and when it's going to flip or if it's going to flip back. Just because these readings, the performance, everything has kind of been all over the place. So, I think above all, you shouldn't get yourself too exposed long or short, and just, have very active risk management principles on. That's what we're doing because this market is just moving on a dime.
So yes, before we get into the Bitcoin event that happened over the weekend, I do what you just ended. This market's moving on a dime. I wanted to ask about that QQQ net option sentiment being so low, but also such major earnings happening this week. That could change pretty quickly, right? So we could see that rise if the earnings are very good, or stay low for like the next month or months if these earnings are terrible. So it's this week is really going to impact how the future of the tech and maybe growth investment landscape is looking for maybe Q3, Q4 this year.
Yeah, I mean, there's obviously with that number being so low, it's concerning, and you have concern. But yeah, to your point, you want to keep your eye on it because if earnings go well, it could flip really quickly. And we kind of got some of this bearishness around Tesla earnings, around Google earnings, but these other companies kind of going in the other direction could really change the momentum. Um, so I think that's things to watch out for. Obviously, what Powell says is very important too. There's going to be a lot of signals in the market, but I think the one thing we know for sure is that the market is very tentative, unsure of itself, and it's just very good to be cautious around that.
Okay, so I did want to cover the Bitcoin move that we're seeing. Obviously, it was a big play for you at the end of last week heading into the event. The saying in the market, buy the rumors, sell the news, seems like a self-fulfilling prophecy because, there's a large cohort of investors that probably had no intention of holding on to Bitcoin or the stocks related to it for a long term. They just wanted to play the event. Some pieces of newsworthy content we got out of it, obviously, RFK spoke and Trump spoke were the two major speakers. They both mentioned the U.S. government beginning a strategic Bitcoin reserve, which is a big change. A roar from the crowd in the conference happened when Trump said he would fire Gary Gensler on day one. I don't know how you feel about that, George. But also the stocks that you were playing off of this event, Coin, CLSK, how do you feel about them now after it and the whole crypto Bitcoin landscape?
Well, we definitely saw it when I saw Coinbase still open up at 100. net option sentiment this morning. I definitely saw CLSK show more weakness, and it's no surprise. Oh, it's down to 97 Coinbase. CLSK definitely showed more weakness, and it obviously is performing worse, worse today than Coinbase. But yeah, I mean, it's very interesting. A lot of things went on. I mean, the thing about it is like Trump is gonna was, and we said this was always gonna tell that audience what it wanted to hear. And he said, I mean, he pretty much put together like the most, pro crypto platform that anyone could ever, and that's what we anticipate anyone could ever say. So I thought that was very predictable. I thought that one thing that I think, kind of scared me and why I kind of exited all my Bitcoin positions, right after he spoke, is he did kind of set up this doomsday scenario with Kamala Harris. If she won, that she would be the worst thing ever for Bitcoin. And honestly, I don't know, maybe she wasn't prepared to talk about her platform for it, but I really don't know why she wouldn't show up and at least, say some of the similar things. I think that the Democrats kind of consistently show bad strategic values on these things because who even knows how many of these things Trump is going to do. He could be serious, he could not be, but it doesn't really cost him anything to say it right now. And I'm not saying you should get up there and lie, but Kamala could at least get up there and say the things that she was strongly considering. Like, I don't think it's a bad idea to overall just like spur like mining business in America and create ways to bring businesses back into America. I don't know why saying things like that Trump said wouldn't be something that any president would have the desire to do. I think there's just like sometimes I think Democrats are pandering a little too far to their base and not obviously the banking industry. This is not something that it works great for a lot of them. They're starting to dip their toes in the water, but anything that questions the dominant power base or currencies or banking systems that have existed do challenge existing financial institutions. So I think that was another situation where it's just like I think the Democrats too often don't think about getting elected and just think too much about like aligning themselves with the people that give them money. And I think that has proven to not work very well for them, especially in the recent future. And and I don't think they should just pay lip service. I do think a lot of what Trump said the country should be interested in. Now, one of the things that I don't really understand what he said is I don't necessarily think the U.S. having their own stable coin is a bad idea. I don't necessarily think, because that just like strengthens our position with the currency. Like I get that, people that are super into Bitcoin want Bitcoin, but the country still has to look after its own best interests. And strengthening the dollar is in our best interest. And I don't necessarily agree with what Trump said that strengthening like the dollar and basically propping up Bitcoin and keeping big reserves of Bitcoin are one and the same. That's really not, that doesn't make economic sense. If we're taking our dollars and moving it into Bitcoin, it would be the same if we were buying a foreign currency. That does not strengthen the dollar. Now, could it be a good investment? Yes, that absolutely could be true, and I don't think it's a bad idea from that purpose. But does buying a bunch of Bitcoin strengthen the dollar? He said those two things were kind of like not mutually exclusive. I don't agree. I don't think buying a lot of Bitcoin strengthens the dollar. So there were some things that I do think were kind of for the audience and don't really even make that much economic sense. But yeah, overall, I think people reacted very, ultimately like very positively, but we're definitely seeing a sell on the news event. I wish I had gotten out of more of my Bitcoin and CLSK this morning after I started it going down. But, that's what we always say about Bitcoin, where it's just like where you can't, the options markets are non-transparent and it's very hard on a pure price forecast without being able to look at other things, without something like net option sentiment, looking at kind of the levered bets on something like Bitcoin. We don't have good signaling and it's really hard to tell like, oh, did we reach the bottom? Or, is it turning around or does it have a lot further to go? So that's what makes it very tough. And that's why we generally stay away from it. And I'm going to be very happy. I think I'm going to sleep better once I'm out of the last of the CLSK and coin, which we're getting out of. But I'm thinking we might see a little bit of a rebound. Who knows? But maybe, by tomorrow, one way or the other, we're going to get out.
So, summarizing that, you think maybe the events of yesterday or this weekend are net bullish long term, but not maybe as impactful for the stock short term as probably some crypto people and would have hoped, like going into the weekend.
I'm not sure it's net bullish long term because of the way he set up this like doomsday scenario if Harris wins. And keep in mind Harris hasn't even named a VP. That could really boost in the polls if it's someone that is going to play well. So this is very much a race. And I think that's what people reacted to. Like I think people were treating and if Biden was still in and Trump said those things, I think it would have boomed, no turning back. But the fact that he also kind of set up this doomsday scenario, if Harris wins, I think people are going to be tentative. I think people are going to be worried, and I think they're going to, he basically set it up for a market that would do incredibly well if he was elected, and I think he wants that, right? I don't think he wanted, Bitcoin to run up into the election because then I think he wants to be able to take more credit for the ultimate performance of it. So I definitely think that part was intentional too, and I wish I had seen that coming a little more. But when I first got into the trade, I actually didn't know if Harris was going to speak or not. There were rumors that she was going to speak, and I thought when I first got in, they were both going to kind of pander to the crowd, and again, I think that would have been the smart thing to do. But yeah, I expect, like the market overall, I think there's going to, whether or not the market goes down, whether or not Trump says more things that scares the market, I definitely think we're going to have a tentative market that is, not sure whether he's going to say anything that scares the market or not.
So we covered a story in the past few weeks of how McDonald's was introducing a $5 meal to their menu. It seems like maybe after today's earnings from them, we got the reason behind why they were doing that. They probably saw this data throughout the quarter where so McDonald's reported a double miss. And even though they did that, the stock is actually not performing that bad today. It's up over 3%, which is just, it always amazes me, the earnings reactions. But so same store sales fell for the first time since Q4 2020. And they stated that they're going to be leaning into value meals amidst consumer pullback. Obviously, McDonald's is a huge brand, so they have data from all over the country. If they're seeing consumer weakness, is that a big problem for the economy, you think?
Yeah, what was their guidance like? You always have to look at that.
Uh-huh. Let me
Let's
try to
check
find
it
it
out.
quickly.
I'm looking it up. Mm-mm. Yeah, that's interesting, especially on like a day where the market's just like not doing all that well. Well, they hit they hit good operating margins, which is definitely good. Um, let's see. Mm-mm-mm. Well, yeah, it's not easy. I'm not seeing it easily. Maybe we'll follow up. Um, Yeah, I think when a place like McDonald's, and we've kind of talked about this when we saw them kind of recover before some other consumer cyclical stocks, I think McDonald's has a good reputation, obviously, over many years for being something that can like weather the storm. So there might be a lot of optimism over the fact that like if people become more price sensitive and careful with their dollars, that this plan around the value meal and like pushing that could ultimately result in McDonald's doing better than a lot of their competitors and perhaps taking business away from pricier offerings. So that could be what the market is thinking. But honestly, we've just seen a lot of weird reactions to these earnings, and I wonder if like part of it is like anticipate the stocks are getting beat up in an anticipatory fashion. We saw it with American Airlines. They reported horrible earnings, and the stock was up that day. That was a real puzzler. And then Google, which didn't did pretty well, was down. So maybe we're seeing a market where people have started to these stocks are being played leading into earnings in certain ways. And that's the thing about the market that's always very hard. And we kind of talked about it with our newsletter, and Warren Buffett and Amazon being one of his bigger mistakes. We've talked about this, but beyond like the concept of value, there's always the question of like how much value is baked into the price. How much of the future growth, how much of future events is already baked into the current price. So I think we could be seeing that. I think we could be seeing some of these reactions being that like, beyond what expectations were, there were, expectations built into the price on top of those expectations. So I think people might have been expecting maybe a more disappointing earnings and guidance from, say, like American Airlines, and perhaps the same for McDonald's. And so you actually see it move based on the fact that it didn't come in as badly as some were expecting, even beyond like, because like you have to remember, consensus estimates are what analysts think, and then institutions, hedge funds are going to have they're going to have their own take on what both like earnings are going to be, as well as like the resulting price action and where they're putting guidance. So I think what we might be seeing is a lot of institutions that were more bearish on some of these like consumer cyclical or industrials names. Airlines are industrials, but I consider them pretty adjacent to consumer cyclical, and maybe having maybe they were expecting more out of some of these tech names. So I think that kind of plays into what we said with some of these other companies' earnings, that you're going to have to be very careful with the market being tight. And maybe if you see like something like a double beat on Meta or Amazon, that might not ultimately carry the stock, even when we've seen earnings misses resulting in good things for like McDonald's and American Airlines. It's clearly going to be an interesting earnings season.
So that to me seems like it's got to be one of the hardest things to actually accurately know in the stock market, where so the actual expectations of people who have put their money in things versus the expectations that are printed in the newspapers and stated by the companies. Is there any way to figure out the actual truth of what people are expecting? Because it seems to me like it's hard to actually know until you see how the stock reacts.
Yeah, I mean, I think the actual truth is how the stock reacts, because I think especially with all the algorithmic trading, you don't really even know what the market's thinking until the robots have their say. And a lot of the times the robots are kind of pushing and pulling against each other to see like what direction they can ultimately make it go in. So I think that's the really tough part about figuring any of this out, which is that um, it's just very, the way, even there's another layer beyond what you said. There's the listed expectations. There's where like, fund managers that are forecasting, macro and guidance and things like that put in. And then there's the way that kind of like the robots, the momentum of the market responds to all of it. So I think, net option sentiment is a good way. That's really what we invented it for, to get a good real time look in terms of like where those options prices are going in real time, and can get you kind of like a good feel about that. And I think the only other best way to go is value. You can always look basically like where earnings come in and where those earnings are relative to the closest comps of companies. And I think those are the two best ways, because you can always lean on value to say like, look, if this company just reported something that put their trailing 12 months PE at 20, and they're and they're a lot of their competitors, they average out or they bottom out at like, let's say, a 15 PE. Like you can have some reasonable assurance that that's a fair bottom for it. wherever like the bottom of the comps are, especially if it's close enough comps. Like I think those are the two best things the market's going to ever give you. Now, obviously, if the closest comp is going down, that could be a moving target too. Like by the time the company that reports gets to 15, the other one's at 10. So you have to keep your eye on that. But I think those are the two best things, you know. And net option sentiment was really invented to both be faster and be like a nice supplement to value, because a tough thing about what I'm just talking about in terms of like closest comp value, like it's very hard often to find like a true comp to a company. And that's why PEs get in different directions. And that's what it makes it very tough. But like you can always use an industry average. You can always compare the company to itself historically. That's always a good way to do it. Just be like, okay, this is the bottom we've seen for the PE for this company historically. Now, growth always has to be a part of that. Like obviously, if a historic PE of a certain like, bottom came when the company was growing faster, that's something you have to think about. But I do think those are the best you're going to get. Those kind of two perspectives: net option sentiment and looking at some kind of value metric, especially PE.
So now I want to dive into the earnings that we have yet to come this week. The four big ones: Microsoft, Meta, Apple, Amazon. Do you have any different feelings amongst those companies? Ones you're more confident about, less confident, and just how do you think that's going to affect the market this week?
Even though I've kind of said that Google, like I was surprised how hard Meta got hit because of Google's YouTube revenues, because they're closing down businesses. I am a little concerned about Meta in light of that ad revenue going down for Google. Now, what I will say is, I think Meta is doing some very interesting things in AI, open source. They started to do some of their, they've rolled out some of their generative AI. I think we want to hear comments on that. I do think, and I think we're going to get into this story later, I do think if they have exciting enough tech developments, I don't think Google was really able to do that. They could weather the storm of, the ad revenues being down, but I am definitely concerned about ad revenues missing after Google's ad revenues missing. And I don't think I'm going to hold Meta through earnings as a result of that. I think I'd be most hopeful that Amazon beats, just because I think the big thing with Amazon is, their business just like always chugs along. Like that's the thing that you can count on with them. And I do also think that if people are becoming more cost conscious, like Amazon doesn't necessarily, it's not the same kind of consumer cyclical as a lot of other stocks, because a lot of people will use Amazon to save money, right? Like for example, like you can go out and buy something, but like, just as an example, like it's been a long time since I bought like toilet paper or paper towels, like in terms of like not on Amazon, and it's just going to be cheaper when you do that. Or like, so I think, when you're trying to save money, Amazon is just a very easy alternative for that. So I think that, you might not see them guiding down in the same way that other consumer cyclical stocks would. And I think that could result in a very good, I think if anyone is like, other than Nvidia that just beats and beats and beats, but they report way later, I think Amazon's like kind of the one that I'd feel safest to own through earnings, just because like I do think, and we talk about this for the next 10 years, I think Amazon's going to be the best company to own, just because I think they can weather any economy. They're always building out smart new businesses. So I think that I think Amazon is, I think the one that I'm kind of most interested in the results of.
So I want to share this personal anecdote I have about Amazon. I was at a family dinner one of the Sundays ago, and there's a new Amazon Fresh store near me. And my mom came in and was talking about all the great deals in it, how the prices are so low, blah blah blah. And I'm theorizing in my head, maybe Amazon, they're making a bet on long term, keeping prices low, but maybe they're doing that so that people will, through word of mouth, spread how good it is, and they don't have to pay for marketing. So they're sacrificing the price of goods for marketing costs. And that's a 40 type of chess that maybe their management is capable of playing. How do you think about that? You think that's a possible thing?
Yeah, I think that's very smart on their part, and I think they definitely do that, and they do a lot to make sure they keep prices low, and they really like, it's the Walmart business model. They like Walmart really like wrote this playbook, um, where it's essentially looking at um just leaning on your suppliers, making sure that you're basically just like optimizing customer service, you're making it a very good experience, and yeah, then you don't really have to market. Amazon doesn't really have to market. Like, you know, not only that, I feel like there's no bigger advertisement for Amazon than the boxes and the trucks and like everything. Like, if you want to talk about like, and I think it was smart that they started to do their own shipping too, right? There's no bigger advertisement. Like, I remember when I lived further uptown, there was this one, like, I would see sometimes this one huge Amazon truck that would just open up and people would get out of it with their pallets, because I think they were going on like the brownstones that like you couldn't really drive down those streets. So they were like all going onto these like other little streets to deliver their things. And like, to me, any idea that I had that I wouldn't use Amazon kind of, and this was years ago, kind of like expired at this point, where it's just like, I'm not like, even for moral reasons or whatever, it's just like, I'm not moving the needle. Everybody's using Amazon. So I think that you don't need to advertise when just like everybody sees it. And then, yeah, like even in conversations with people, I've had so many conversations where it's just like, where people are just like, yeah, like I just get everything on Amazon. It's just like so much more convenient. And like, for me, the big thing that's helpful too is like the reviews. I really think the reviews are super helpful, because, when I'm buying something, when you just walk into a store, I don't know how it's been, I don't know what anyone thinks about that product. Yeah, I could pull it up on my phone or whatever, but like just putting something in the search bar and being able to guide towards like what's reviewed. Even like I've started to use like Whole Foods for groceries, and I like rely on that, because like I'm not just guessing at any product. I'm basically like seeing what people have to say about a product and getting the ones that people like.
So when you were talking about Meta, you were mentioning the tech that they're developing. Maybe we'll get some announcements or newsworthy events tonight, because Mark Zuckerberg and Jensen Huang are having a fireside chat, I believe at 6 p.m. Eastern time. Are you expecting any announcements from this, or do you think it could be more, broad AI topics, or do you think we're going to get a Meta NVIDIA partnership announcement out of it? How do you feel about heading into those two minds meeting tonight?
Yeah, if I had to guess, I mean, NVIDIA wants to position itself as more and more of an AI product company, right? And then here you have Meta, which is building like the best open source LLM, Llama, and I've heard they're investing a lot of money in Llama 3.1. Um, and that's going to be free. So talk about like a natural partner. If NVIDIA wants to like build and be an AI product, basically send these chips, maybe embedded, maybe preloaded, with Llama models, that becomes more and more of a product company. And I'm sure that's what, like, that's like that's what I was alluding to. Like, if Meta has this big partnership with NVIDIA, to like embed Llama, um, in their systems and kind of roll out products, and maybe like that's a happy marriage of, they built this open source product, but I imagine Nvidia, for like embedding it, would pay them some fee that would be much lower than partnering with, you know OpenAI or Anthropic or anything like that. So that would be my guess. It's a really natural marriage there, where Meta is putting all this money into this open source software that's like very, that's very good and smart. But, a partnership with NVIDIA where they can, roll out fully formed products, right? What you could do with like a Llama 3 model or 3.1, and like a Blackwell, like you could go, like NVIDIA could go to a business and say, like, I've preloaded, um, this model. All you have to do is like, you know, run these prompts, and like it'll spit out the product that you've asked for me, or even like preload some of this stuff for an extra fee, because I do think NVIDIA will get more and more into that market. They've called themselves an AI product company where they're actually just like rolling out, fully formed products for people. And if they want to think about how to keep their costs low there using Llama and paying just like a small fee for that instead of having to, deal with, OpenAI, Microsoft, Amazon that doesn't have an open source product that really is like clearly signaling to the market that they want more than that. That could be very, very interesting for both um, for both Meta and Nvidia. And like the game in open source is that it becomes widely used, more and more widely used, and then Meta is like kind of the expert on implementation. They can help you with custom implementations. They can put in certain kind of patches that allow you to do different kinds of things that are kind of like add-ons. So Nvidia helping them gain market share with something that they're investing a lot of money in, that seems like a very interesting thing for all sides.
So I'm forgetting now who I was hearing talk. I think it might have been Jack Dorsey who was talking about how open source always beats closed source development. Would you agree with that? And then by extension of that, since Meta is taking the open source route, are they destined to outcompete OpenAI and other tech or AI companies that are closed source development in the long run?
I'm not sure. I mean, maybe in the long run, he's right. I'm not sure that's what we've seen. I'm not sure that's what we've seen in like history. But I wonder why he's like, I wonder why he's using that, because I'm trying to think. Like he
I
doesn't
could tell
really
you.
have any
I
open
could tell
source.
you why. Part of
Why?
Square there or Block, there's segments of it called TBD and Spiral, which are like Bitcoin related stuff that are open source projects. So he's probably talking about that and pitching those
I would
things.
be like, I haven't seen him make Stripe free. Like, I mean, is he saying that? I mean, maybe he's saying that those payment systems will eventually replace Stripe. But that doesn't do very well for his shareholders. If that's the case. I mean, we're talking about, I mean, but I don't know. I don't know what he's thinking about the monetization. I don't agree with that. I think that, for now, like when people pay for products, like it allows you to make the products better and better, and that's the system that's worked. I don't think they've quite figured out I don't think anyone's quite figured out how to monetize open source in a way that makes it competitive. Like I think he very well could be right. Someday that's what we'll have, just because I think businesses will have to get used to the fact that the value of technology is going to zero, and you're going to have to monetize things less in order to get mass adoption, because that's what people are accustomed to. I do think that's the direction that we're going, but we're not there yet.
So we have two Apple stories to cover. I guess we'll start with the more bearish, less fun one, and we'll keep our viewers waiting for the cool story that we're going to get to about their patent. But the first one is about them delaying their AI update until October, which is about a month after their next iOS update comes out. We saw Tesla react very negatively when they had a similar story about their self-driving being delayed. Apple doesn't seem to be reacting as much. Maybe since they have earnings, the market's expecting them to update everybody this week on it. Do you think that's a bearish sign that they're delaying the AI and it's not going to be available when the iOS comes out?
Um, I think given their history with some of the product rollouts, like Maps, I think it makes a lot of sense. And the thing is, I think it's smart. Like, yeah, like the stock might take a hit in the short term, but I think it's smart. Like they've already missed the run of generative AI, right? So it's not like they didn't get in the first waves, so they're gonna have to get in at they're going to have to go for quality, right? They're going to have to go for a product that, really works, a lot of people love. So I think it's smart, especially if they're seeing that. No reason to rush out something just to get it out when they've already missed the first wave. For them to have mass adoption, it's going to have to be really good. And I think that's the most important thing. I think the most important thing is when it lands, it really helps, because so many people have iPhones, right? And I'll use Siri to like set timers for me and everything, but other than that, I actually use my, like, if I have questions or anything, I'll use my Google Home that's also around. I just think that that's a better product. Um, so that's already happened. Like, and if they roll this out and it doesn't impress me very much, it'll probably be a while again before I use whatever they have for anything but setting timers. But they will have a moment or a few tries to grab me, and I feel like that's how it's going to work with everyone. They're going to have to be like very strong to like get that attention. Now, one of the things you think about is this moving the needle on people buying an iPhone or not? Maybe if they execute really well, this could be a new thing to get people back into iPhones for sure if they perhaps left. So I do think it's important that they execute on it. But we'll have to see. But I do think that they shouldn't rush it. They should make sure that they've executed on it properly.
I feel like that's a known, or investors talk about how that's Apple's strategy, where they don't try to be first, they just try to be the best in class when they actually do make a product. Do you think that's they can do that since they're already the biggest company in the world, or do you think that's a strategy that all companies of any size should take?
I mean, I think that I think that if we're talking about Apple historically, I think it's changed a bit. They used to do so well in like the building up of it and the event and the release. And I mean, look no further than the VR headset to know that that isn't Apple anymore, right? So I think every company should aspire to do what Apple did in its best days, which is build excitement for products, get people, waiting in lines, that kind of thing, and some companies have, executed maybe not hardware, but like gotten people like, you know, waiting to get into the product and, sharing like referral links and things like that to get in. So I absolutely think that, that's what every company should aspire to do. But I don't think Apple's the same Apple that they've always been, where they're just like executing perfectly on everything. I think some of it is a function of like, look no further, like this generative AI thing isn't even their own product, right? So like it's not the same, that would have never happened in the old Apple. Like they did everything themselves and they controlled everything. So, I think it's happening for different reasons. So, but yes, I think if we're talking about like who Apple was and the way they took their time to release things and built excitement, every company should aspire to be that good at product releases.
So maybe they could get back in gear with this product or tech that they're working on. It's a leftover from the Project Titan Apple Car project that they officially ended earlier this year. So it just came out that they have a patent for a camera system to project live feeds on car windshields, and they would replace rear view mirrors with cameras that capture external footage. Seems like a pretty cool idea. Maybe they're leaning into like services for cars versus actually building their own car. Maybe they could roll out this product in the old Apple way we all want. How do you feel about that tech that they have patented now?
Yeah, I mean, I think it's a super cool tech. I don't know how easy it would be to like software patents can be really, really hard. Like I would be interested to know if they could block that for like every car maker that wanted to make something like that. But if they can, it's worth a lot of money. And I do think we're gonna see more and more, like obviously like the way Tesla has their parking system, full self-driving. I think we're going to see more and more cars that work on software. So I think the nice thing about that is they don't necessarily have to sell it to one manufacturer, like an old hardware system or how it worked. So yeah, I think they could sell into a lot of them, and I think the cars would have to be properly outfitted. But that could be a huge money maker for them if they can figure out a way to make deals to put it in a lot of cars, which I think is realistic. But I also think I don't know how defensible that patent is. Like I just think it's like it's difficult to be like, oh yeah, anyone that wants to superimpose an image from behind on top of like a windshield, like Apple owns that. Like, it might be a situation where companies don't build it even though they could, just because they don't want to get into a lawsuit with Apple and they'd rather just put it in their cars. But I think it's going to be very interesting to see like how many car makers they may or may not be able to make a deal with, and then B, like what's the pricing on that? Like, what are people willing to pay? Like, you already buy a car, like are you willing to pay $10? Are you willing to pay $100 a month to have like that service? But it certainly would be annoying if like the cars cost more because they were being outfitted with this hardware. And then you also had to pay like a high monthly fee. But I think that's the direction that this is going. And yeah, I mean, it is interesting that they bagged that car. It really feels like Apple's pretty directionless right now. It's just kind of interesting to watch.
Well, going further off into the future, 20, 30, 40, 50 years, as self-driving by that point, hopefully, is available, probably in every car, do you think the front of the car just becomes a TV, like the windshield becomes just a screen that you can use from the inside? Maybe Apple is way in front of that, use case down the road, developing with this.
I mean, I guess the real question is, are they missing here, right? Because like if we go more and more towards automation, do you really need to look what's behind you? So this might be just another product that might not be being placed at the right time. Granted, I don't think it's going to be anytime soon that people aren't driving, but like, do you need a rear view mirror, for example, if the car is like parking for you? I think that's like the primary thing you need a rear view mirror for. You're like, yeah, if you're pulling out of a place, whatever, like, but maybe that's something that like, not full self-driving, but like half self-driving is like, get me out of this parking lot, back onto the road. And then it could kind of like, navigate you out of there. So I think that's an interesting aspect to it, as like, we keep talking about this. Tesla's making a big, big bet on automation, full self-driving. So it might be something where, do you really need a rear view mirror anymore? What do you really need in a car if it's going to be, kind of driving itself? So I think the next few years, especially if Trump wins, is going to be very, very interesting. And it was so funny to hear, like, it's just like classic, like the political situation that we're living in right now, where like Trump was talking about in his Bitcoin speech, talking about how like we're gonna burn fossil fuels and like basically like fuck electric cars. We were just like, well, except for Elon Musk, like he $45 million, like him and I are friends. Like there's room for Tesla and fossil fuels. So it's just like, it's pretty funny, like, like how screwed like self-driving and electric would be if Elon Musk didn't buddy up to Trump so much. But like maybe that's when we talked about. We were always like, hey, maybe Elon Musk has a plan in all of this, and we always said that like Elon Musk's a smart guy and he might be thinking on levels, but he might have been playing the long game with Trump, like knowing he was going to win, seeing the direction of everything. And yeah, like if you look at that speech and how negative he was about like anything that wasn't like burning fossil fuels, like, and he went out of his way to be like, we're gonna burn, like, and that's what we need. We need more energy. We're gonna burn it. It's gonna be the cheapest energy. Like, you do kind of have to wonder if Elon Musk didn't like ingratiate himself so much to Trump, where like self-driving would be, where like electric cars would be at all. So it's kind of interesting how these events play out.
Well, that's a really good point. And I've seen some Rivians, some Lucids on the road. They're good-looking cars, but if you're an investor in those companies after hearing Trump speak, are you like super nervous about the future? I mean, I've heard and read that it's very difficult to start a car company from scratch. Most of them go bankrupt. I think Tesla's the first American car company to like be successful since, yeah, I think you have to go back decades. So, if you're a shareholder in those stocks, are you nervous after what Trump's been saying?
Yeah, I started shorting Lucid. I actually like I also got into AMR, a coal company, because I was like kind of like, oh, like I guess it's fair to like short electric and maybe go long coal. I was thinking that after that, but the AMR hasn't worked very well. So, always hard to know exactly how these things get baked in. But yeah, I mean, but here's the thing, while I agree and everything you said are good points, like I don't know how you target just non-Tesla electric vehicles. Like I think either you make good legislation to get things on the road for electric vehicles, or you don't. Like I don't think you can really target. I mean, the one exception might be supporting more self-driving than just like electric cars generally. So I think we have to like basically see that could be ultimately what happens.
Okay, so pulling out a bit and going more macro, we have the Fed meeting this week led by Jerome Powell. They are not expected to make any moves in rates this meeting, but the market is now pricing in 100% for September, 69% for September, and then 69% for the meeting after. And then there's even a chance for a third rate cut all this year. We saw at the beginning of this year, the market was expecting rate cuts that never came. I don't know if these are going to go the same way. How are you feeling about the Fed meeting this week? Does Jerome Powell have the power to fully set these in stone, these rate cuts, or kind of put them back a little bit further even?
No, I mean, I think given what's happening with the election, and now that it's a close race and the market really expecting, like, I don't think there's any way uh Jerome Powell's bosses in Washington, like, allow him not to have a rate cut happening. Like, granted, if it was more like 50-50 or like whatever, but the market's saying it's going to happen. And by the way, those two things are interconnected. The market isn't so confident it's going to happen if they don't have like some assurances, if they haven't talked to some people at the Fed. So I also think inflation, like, we are on top of it. We continue to get good readings. We're on top of it enough. Like, yeah, I think those rate cuts are coming. And I just don't really like. I even think a hot inflation reading, like, because they've been coming in so good, I just don't even think that changes anything.
Jerome Powell's bosses, I thought the Fed is independent.
Oh yeah, sure.
So we have some time here, so I'll ask for questions from the audience before we do our switch over. I could also mention, I wasn't going to bring it up, but since we got a little bit of time, the success of Deadpool, newest movie from Disney. It had a global total of over $483 million, which is breaking records. And they also did have another successful movie release. I believe it was Inside Out earlier this summer.
Oh yeah.
Maybe Disney is getting their content back in line with how viewers are willing to spend money for. Is this a good sign for Disney?
Yeah, I think Disney might be a good buy now. Like, I think they got beat up pretty hard, and they still have good assets and good, like, good things always like coming through the pipe. Like, their parks are stable. But I just think the big thing, and I was actually talking to someone about this in my building who works for Disney. The big thing with them is it's just like they're sinking money into this streaming platform that just is it's just a big sinkhole, and they were pretty dumb, I think, to pursue it in the first place. Like, it's one of those things that you could sell your content and get revenue, or sink a bunch of money into building like a duplicative system that, like, I just don't think it's a strong enough content pool. And yeah, they've kind of partnered with like Hulu and everything else, but like, why not just like leverage, like, in terms of bundling, why not just leverage Hulu's technology stack, which is already better, and put your assets into there instead of just like building a whole new one? It's just like they're going to need to continue to support the streaming platform. And I just don't think, like, I continue to think that'll be like just like a sinkhole on their business. So it's like, while I think they're a little like undervalued because of all the good assets they have in their business, I think they're going to have to prove that they know how to like run a business intelligently again. When I can do that. And then you have, all this stuff with, AI and content, and kind of like going back to the strike, and if these are good long-term businesses. And I think there's legitimate concerns about those things. So, their movies are always gonna do well. Like, they put out great content. I think the concern is like the surrounding parts of the business, but they could be a good buy if they start to figure out how to do better, with streaming. There aren't kind of future concerns in terms of, dealing with actors, writers, whatever, in terms of like the way they're paid. And those are major risk factors. So I'm not sure it's there. And that's why, like, if there weren't, I would say the actor, writer, like all of those like content surrounding risk factors, I would probably say Disney would be a good buy right now. But I think there's just too much long-term concern, not enough stuff worked out, and they got to figure out what they're doing with Disney Plus. I just don't think that's a good situation for them, and I don't know how they turn it into one.
Well, that was what I was going to ask you following that. So if the headline comes out, Disney ends, like, Disney Plus will look to, whatever you said, leverage their content on other platforms. Is it too late for that to happen in your mind, or is that bullish that will happen if that story came out?
I think it's bullish, but I think it also might be too late at this point. I think they have to maybe figure out if they can turn it in to a profitable thing, like because they've already invested in building it out, right? And getting subscribers and things like that. Like the way they win is they're going to have to acquire more content, and they did well with like I think the Star Wars acquisition was a big acquisition for them, like getting that whole universe. But they're going to need to acquire and build more content in order to make it a good service. But like, yeah, they're kind of in no man's land. I don't think they can shut it down, but there's also going to be so much more that they need to spend to turn it into a profit center. So, I just don't really know what they're going to do on that front.
Mm-hmm. A lot of questions surrounding Disney stock. I don't see any questions from our chat. Do you want to do our switch over right now?
Yeah, let's do
Heading
it.
to, all right, we'll see you on the other side in the Prospero.Ai laboratory. I'll update everyone on the SPY and the QQQ net option sentiment right now. We are seeing the markets after the dip from opening up, then dipping, kind of recovering now. The QQQ is up 1/3%. SPY is up 0.19%, and the Dow is slightly negative, almost flat. The Russell is actually the worst performing index today. So if there's anybody who's been following the rotation in the indexes, it seems like we're getting a anti-rotation type of day. I guess with all the earnings this week, maybe people are finally starting to go back into those stocks. But let's check out the QQQ net option sentiment. It was at 3 to begin the stream. I think George said he saw it as high as 11 today. It was 0 last week, and it's back to 0 right now. So not looking too bullish for the big cap tech. And let's look at the SPY. The SPY is at 42, which is the same spot as when we started the stream. So the SPY net option sentiment holding up far better than the QQQ. Definitely noteworthy happening there. That's the farthest spread I think I've seen the two indexes. Usually they kind of follow each other somewhat, but SPY holding up much, much, much better. Let's get a live look at some of the plays that George is taking in coin. Net option sentiment back to 100. CLSK. If anybody followed him into those plays. Upside 83, growth 83, net option sentiment 78. High dark pool and short pressure there. So seems like it's going to be a volatile stock to hold. I hope you guys enjoyed the topics that we covered so far today. We didn't get any questions though, so feel free to comment for the remainder of the stream if you have any questions, any topics that we did not cover, any stocks that you want us to look at while we're doing the model portfolio update. If anybody's new to the stream, what we're doing right now is taking a live look at the market, seeing what we like, what we don't like, what changes we're going to make. Let me do this. But George, we're seeing the QQQ net option sentiment back down to 0 and the SPY holding steadier at 42. I think it's also interesting so far today. The Russell is the worst performing index and the QQQ is the best. So maybe we're seeing an anti-rotation type day.
Yeah. I guess we're not gonna overreact to that, but yeah, it's like we just keep on seeing, we keep on seeing this inconsistency. That's the consistency, the inconsistency.
Mm-hmm.
So
The seesaw.
that's why we that's why we kind of have been warning everyone about how tough this market is. Yeah, energy, consumer discretionary has recovered, but I don't think we're gonna play this too strongly.
Energy looks like a good target on the short side. And for long, the only thing that might be worth looking at is communications recovery or healthcare.
Okay. QQ is at 0. SPY, what did you say, 42?
Yep. When we see this huge divergence, all it means to us is how risky of a market we are looking at.
Yeah, I mean, nothing's large cap value is like coming back a little bit, or large cap growth, but
I feel like the riskiness, the volatility has kind of been on the forefronts of our mind recently. Do you think this earnings can really quell those concerns quickly if they're very good?
yes, definitely. I think, but they need to be strong, and I'm not sure they will be.
Mm-hmm. Large cap growth is coming back, but not fast enough. We feel like there is anything beyond a small correction. We'll keep an eye on this.
Shorts first. All right, let's see. Oh, damn. We really had 3 ONs open. Yeah. Oh, God. That's not wonderful. They reported good earnings today. But let's see our short versus long. 84 short. Not really 102 long. Close. No, we closed some of those coins, luckily. BMC. All right, so I think this is it. What's going on with? Can you talk to me about Eli Lilly? Well, I'm just going to look at it myself, actually. Okay. No, that can't be right. That I'm missing so many of these. Ah. That is what's going on. I had hidden some rows. I was like, there's no way we could be looking at that. All right. Okay. Yeah, Meta's doing well. What GWW? We've been seeing that come out a lot. No, I don't really like that trend. I think that's all I want to do. I'm adding P10 short right now and the investing letter.
So our stream is watching a live move. What one stock I forgot to mention, but I saw it had a crazy move. I think on Friday, which you would never expect, was 3M. They moved like 20%.
Oh yeah, it went up in our signals.
Yeah, one of those dinosaur brands that I guess just is seeing a rebound.
Okay. And then anything else? MG. We'll add this too. All right. Now let's see. Other things. Just any good shorts. I don't think we want real estate. That looks good. We're also going to go short VLY. We almost did it over the weekend, but
For the viewers, VLY and Prospero, 10 net option sentiment, 57 downside, 29 upside. So pretty bearish looking. Low profitability, 43. Valley National Bank Corp. I don't have our viewers. I hope our viewers don't have their savings there. No, I'm kidding.
okay, let's see what else. All right, NEOG. Doesn't look like the right thing there. I think we saw healthcare coming back a little bit. But maybe. Oh, well, that's been on our list a while. Maybe we should have gotten into that. All right. Oh, MSG.
Don't short the Knicks.
No, I'm not. I avoided it. All right. LCID. I want to exit more long. I want to get this more balanced out. I exited 3 this morning, but all right, I think that'll do. We are done. Any questions?
I am not seeing any questions in our chat. Speak now
All
or
right.
forever hold your peace.
There we go. All right. Thanks for watching, everyone.
Thank everybody for tuning in. We'll see you back here Wednesday, 3 p.m. Eastern Time, covering the earnings. See everybody there. Bye.